Good morning. Thank you for the introduction. I'm glad that all of you are here on a Friday morning. For those of you who don't know me, I am a CPA. I'm based in Tukwila, Washington. I've been doing this for over 21 years. Some of you yesterday asked me how long I've been doing adult family home. I, I changed my strategy about 7 years ago. I was a general CPA, basically doing construction companies, healthcare, not-for-profits, all over. Because when I was a young CPA, I used to work for a CPA firm, and they gave us everything that they could. So as I got older, I decided just to focus on a specific niche market. So last 7 years, I was slowly getting into the healthcare sector to focus on. And the adult family home is part of the nursing facilities, which is also falls under the umbrella of healthcare. So primarily, my clients are supported living clients, adult family homes, group homes, nursing facilities, small office doctors, chiropractors, and dentists. Because all of you have one thing in common, and that is to help people. Some of you keep them in a safe home, and some of you, and some of them actually clean their teeth or another stuff. With that said, this is my third year being part of the fall conference. Last year I was here. I presented a different topic. Some of you were probably there, and some of you were not. To make it easy, who was at my class last year? Just hands. Okay, perfect. And question, how many of you just got licensed recently? How many of you have been running adult family home between 1 to 5 years? Okay. More than 5 years. Perfect. Thank you. The reason I'm asking these questions is I want to see when I'm presenting this what to focus on. For those of you who are new, that were just licensed recently, there is a possibility that you didn't even think about tax strategy. You're just thinking about how do I get this business going? How do I get clients? And for those of you who are more seasoned, that have been running over 5 years, bless you, you're probably making a lot of money, and you're probably paying a big tax bill at the end of the year. You're like, how can I reduce that? So for those of you who are not in my class last year, just a small preview. Last year, I primarily focused on if you're starting a business, and if you already started a business, what type of entity is better for you? Sole proprietor, LLC. If you choose an LLC, then what type of a tax entity is better for you? Do you like just to be a single member LLC? Or if there is more than one of you as partners, are you better off being an S Corp or doing a partnership? So I focused that last year, and I don't plan to focus it here today. However, if that's the questions you have, later stop by my booth, and I'll do the best I can to answer those questions for you. But for today's topic, it's a tax strategy for small business success. Remember, all of you are not the same. Each one of you have a different goal in mind, a different strategy. My goal is just to focus on the general side. When I was driving here this morning, I asked ChatGPT, who is now my best friend, what is the definition of a strategy, right? And obviously, depending on the topic you're focusing on, it will give you a different definition. So for example, if you're a general and you are leading troops, you have a military strategy, right? And the goal is to defeat your enemy, find out how many weapons they have, where they're located and stuff. But this is not a military camp. This is an adult family home conference. So for you, it's more of a business strategy, right? I want my business to succeed. I want my business to make good money. I want my business to have great clients, reliable clients, and those things. But the best definition that I can find for this specific presentation is a long-term plan of action designed to achieve specific goals or set of objectives. So for example, what is your objective? Is your objective to reduce taxes? Is your objective to increase revenue? Is your objective to reduce expenses? Those are all objectives. You just have to come up what objective is more important for you. It's also about what to do, why to do it, and how to do it. You know, we can all just say, oh, I have a business plan, but a plan is nothing without an action, correct? And it must be a goal-oriented, a big picture focused, and you also must allocate the resources. What do I mean that? For example, if you have a pot of money sitting, you have to allocate that pot of money. The allocation can be, what do I set up for at the end of the year taxes? What do I set up for remodeling costs? What do I set up for if I want to attract, better employees, or if I want to give a raise, or if I want to give benefits so that I keep my clients? These are allocation of resources. And last but not least, you also have to adapt with the current market. So that is basically a preview of what I want to discuss today. My presentation is actually short. It's only, I think, 10 or 11 slides. My goal is to go through fast so that I give you enough time if you have questions relating to this. And I'll really appreciate if you can really focus on this topic, because it's unfair to others who came here to listen to this topic. So with that said, let's get it going. All right. Well, first and foremost, all of you are already operating. All of you have already selected an entity. You're either a sole proprietor, you're an LLC, or you're a corporation, an Inc. You also decided your tax entity. You decided to be a C Corp. You're probably filing 1120. You're probably doing an S Corp. You're filing 1120S. Or there is more than two of you and you decided to do a partnership. You're filing a 1065. Or you're just starting right now and you're by yourself and you're just filing a Schedule C, whether you're a sole proprietor or a single member. So the purpose of an S corporation, the goal is to really avoid double taxation. That is the purpose. Well, it has a lot of purposes, but the big purpose is avoid double taxation. So an S corporation is known as a pass-through entity, which means money comes in, expenses are deducted, you have a profit. That profit is basically then it passes through the owner, and the owner takes that and they put it into their 1040. The goal is legally you want that Schedule K to be the lowest it can be legally, right? We don't want to, you don't want to see $200,000 profit after your W-2 on your S Corp. Your goal is to reduce that $200K to something manageable. And I tell my clients, tax planning and tax strategy is all year long. It is not March or February or April when you're filing your taxes. The year have already passed. The year is closed. We cannot go back and change 2024, right? We're in 2025 right now. September, it's almost over. You have 3 months right now. You have 3 months, if you haven't done any planning, to plan. How do you plan that? Well, rule number one, you have to know your books, right? You have to know what's your gross income, what are your expenses, what's your profit at the end of September 30th. If you have no idea, then you can't plan better. All you're doing is just you're depending on your bank statement and your bookkeeper. And then comes March or February, you just take that and the CPA or whoever's doing your taxes is going to tell you you have a large tax bill to pay. Well, guess what? You're not happy. Well, the problem is not the CPA, the problem is you, to be very frank, because you haven't planned better, right? So by talking to your advisor or your CPA around this time is you have an idea of your profit after 9 months. Then the remaining 3 months, the possibility is things will be stable, right? So if you have 6 clients that are actually Medicaid, you know exactly how much you're getting every month. If you have 6 private clients or 3 private clients only, you know exactly how much you're getting every month. You know how much your mortgage is. You know how much your rent is. You know how much your utility is. There is variable cost, food here and there, but at least you have an idea because for the last 9 months you've been shopping for groceries. So you can annualize that for the remaining 3 months. And then you have an idea of how much you're going to end up with at the end of the year, right? If you plan better. So now the question is, Abdulwali, I know you have an idea of how much am I going to pay. How can I reduce my taxes? That is the number one thing. Well, the question is, how much do you want to pay? You'll come and you'll say, oh, okay, you know what? Remember I talked about resource allocation? You had money. You're like, last year I paid 25,000, for example, right? You want to say, this year I want to pay $15,000. How can I reduce $10,000, right? But remember, you made more money compared to last year. So you always have to go up unless there is a big expense that happened. And I always joke with my clients, you cannot remodel every year. You remodel the garage already, right? You can't remodel every year. If you're doing that, then something is not right. Either the contractor you hired is not doing a good job, right? But those are big projects. And depending on you, I usually tell folks, maybe every 5 years, you can do a big remodel. The other stuff is repair and maintenance. But to go back to my topic, I will ask you, well, how much do you want to pay? You say, I can manage $15,000. Then I take my time and I run some scenarios for you, right? And what are the scenarios, right? So for example, let's say you're operating that film for 10 years and you haven't upgraded your beds, your furniture. They're getting old and dusty and stuff because every year you try to upgrade, you see a huge bill. You're like, nope, I want to remodel the garage this year, so I'm not going to update the furniture or the bedding and stuff. Well, this year we can say you can pay $10,000 extra to Uncle Sam, or you can put $10,000 back to your business. Correct? So now we talk about things like, okay, this bed is 6 years old, right? And going forward, I want to change my business plan from Medicaid to private. So I have to, bring new stuff to my house, right? You haven't done landscaping for a long time. The grass is yellow on one side, is green on one side. So now you can think about hiring a landscaping company to come and invest in your property. That can cost you maybe $5,000 or $7,000. But remember, possibly those are tax deductible expenses. I'll tell you something that randomly happened to one of my clients several years ago. She's no longer my client now, but she called me from the Audi dealership. And she wanted to really buy an Audi for a long time. And she said, Abdulwali, I found an Audi that I like. I want to buy it. And how can I charge it to the business company? And I said, whoa, you can't do that. And I said, it's Audi. Even the objectives doesn't really matter. I said, however, if it was a Toyota Sienna, we can probably say you bought it for the business, you take it for grocery shopping, you take your clients for activities. That is reasonable. But an Audi Quattro, it's not, nobody buys an Audi, right? But just randomly, I said, I see that you're taking $5,000 a month on your paycheck. I said, how much is the Audi monthly payment? And I don't remember the number she gave me, but she gave me a number. And I said, why don't you increase your salary by that amount? And then use that amount when it goes to your personal account and pay the Audi as from your own personal account. So we found a different strategy, right? What she wanted to do was she wanted to straight deduct that Audi payment from the business. And I say, that's a personal expense. You can't do that. However, you're allowed to pay yourself, reasonable compensation. Well, we live in King County or Washington State is really expensive. So I'll let you define what a reasonable compensation is. But that worked for her for two reasons. It saved her from, inflating her expenses, obviously, but it provided a legitimate deduction expense there because by increasing her W-2 income. So we talked about this. Actually, I did it. If you have not switched an LLC to an S corp, it's better that you do that. Most people that are new to me, they will come to me and they will say, "Oh, I'm an LLC." Well, you are an LLC, but in the eyes of the IRS, you're still a sole proprietor if you have not made an election. And that election is Form 2553. I covered it last year, but it always comes back because people tend to do their own incorporation. It's very easy. You go to the Secretary of State, you register an account, you pick an LLC, you send a UPI number to DSHS, I think is the licensing, and then you have a UPI number. But what you forgot is there's an extra, you go to the IRS website and you get an EIN number. It takes you 5 minutes. You put your name, social security, address. If you're verified, you get a number instantly. But there is somewhere there that says you have to do an election. People don't do that. You have 75 days to do it. So it's always good to follow through. And I always advise people, before you even start a business, the first person you should talk to is a lawyer. It might cost you $300, $400 or maybe $1,000, but it can save you a lot of headache going down the line. So this helps you reduce taxes by I talked about reasonable salary, the Audi and stuff. You can split your income between salary and distributions. Remember my Schedule K, $200,000? We want that to be lower as much as you can, legally. When does it really make sense to switch from sole proprietor to an S corp? Typically, when you're starting, the first year, you might not make a lot of money, right? You're in the negative and stuff. But I still advise for you to do an S corp. For example, some of you can have a job on the side. You're an RN, you work for Swedish or Harborview, whatever it is. But by still having that, if you have a possible loss from the first year, that can help you offset your W-2 income. So don't be afraid to also do that incorporation at that time. I tell folks normally, once you see $50,000 or above as your net profit, that's when you start thinking about doing an S corporation. You also, in order for an S corp to work, you have to have a payroll. If you don't have a payroll, then it's not technically an S corp from the IRS because they will come after you and they will recharacterize your distribution to a payroll. And then you have to pay payroll taxes back with penalty and interest. We talked about these benefits before. One of the things that I tell my clients is utilize the benefits of S corporation. So for example, if you left your regular job and you're focusing now on the S corp, you're the administrator, well, guess what? You lost the health benefits from your employer after the COBRA. So do the best you can to get yourself and your family a great benefit, a good healthcare benefit. Remember, if you don't pay yourself, you're going to pay Uncle Sam. That's the key. The key is to pay yourself. If you don't pay yourself, Uncle Sam will take your money out because now we have a high distribution that we have to put that in there. So health insurance premiums, HSA contributions. Some of you, you have chronic illness, right? You're diabetic, you have high blood pressure. Set up yourself an HSA account, health savings account. Run it through the S corporation. That's a business tax deductible. Some of you, I asked some of my clients, have you thought about retirement? They're like, no, I haven't thought about that. I haven't thought about retirement. Because in their mind is, I want this business to grow. Nothing wrong with that. But as soon as you open the business, you should think about retirement, a 401k plan. There is lots of different type plans. There is the IRA individual retirement plan. There is the SIP. There's the 401k plan. Obviously, you have to hire a plan administrator to write you the plan that is basically compliant with the IRS. And this way, you run it through the 401k. Through the S corp. Some of you use your personal car to shop for the business. Nothing wrong with that. Well, guess what? You're putting a lot of mileage in that car. Your gas is pretty expensive. I just fueled my sedan yesterday for like $72 at Costco. Imagine at Shell how much you're going to fill that in. What you can do is you can set up something called an accountable plan, right? What is an accountable plan? You decide an average how much you're going to spend on gas, right? Maybe you're filling once a week and it costs you $80 or $90. right? So 90 times 4, you're looking at $360, right? So that's $400 gas. Well, there is the oil change aspect. You can also add that into. You can just say, okay, what I'm going to do is I'm going to have an accountable plan that I set up through the S corp. So what happens here is you use your personal debit card to do all the work on your car, and then those receipts you save them for the S corp, and then you write yourself a check, right? And that check is $400. Sometimes it's $560 because you did an oil change. Remember, it's specific to the business, right? So that $560 times 12, we just found $6,000 deduction. So remember, we're at $200,000 on the Schedule K. Now we're at 194. We're getting better, right? Strategy. Okay, you work from your home sometimes for the business. Well, an S corp cannot deduct business use of home. Well, if you were a Schedule C before, yes, you could have. But when you are in 11th plus, you can't do that. So what do? Okay, your home is 3,000 square feet, right? And you have a dedicated office. When I say dedicated, I mean like a place where you're dedicated to the business, not your son or your daughter's room that you run from. So that dedicated place, I tell people, take a measuring tape, measure the room. Normally rooms are 100 by 100 standard, right? Sorry, 10 by 10, 100 square feet, right? So 3,000 square feet, your built home, divided by 100 divided by 3,000, we are at, sorry, I'm doing my math in my head, 30. No, is it 30? I'll find out later. So you have that percentage, correct? Well, now your mortgage payment is simple math, $3,000 a month, right? And the mortgage includes both the property tax and the interest. What you do is now the S corporation is paying rent to you, the owner, because you're using your home office, right? Remember, the S corp is also paying rent to you as the landlord of the home as well. That's a separate thing as well, right? So there are many ways of you going from $200,000 to 194K to possibly 188. We just continue doing the deduction. What can we find to reduce this $200,000 to whatever we can? Okay, perfect. I talked about the business plan. The IRS really looks at vehicle expenses on S corporations because S corporations usually is for small businesses that use it. You have to be very careful on your business expenses, right? Unless the vehicle is 100% dedicated to the business, which is that's fine, right? Then the title of the vehicle is the company name, the insurance under the company name. We're not talking about that accountable plan. We're talking about your own personal car for the accountable plan. We talked about office supplies. So this is also an area that the IRS also looks at it. So for example, I have seen providers give themselves $30,000 salary. And then at the end of the year, we have like 160,000 on the S corporation. The reason they're doing that is they don't want to pay payroll taxes, right? If you increase your salary, you pay payroll taxes. But what I tell them is, don't think short-term, think long-term, right? So yes, you're paying payroll taxes, but keep in mind the payroll tax is also tax deductible on your S corporation. You know what is also good? When you age and you get close to retirement, your Social Security that you're going to collect will be greater, right? So if you keep paying yourself $30,000 for 30 years, well, your colleague over here that was paying themselves $60,000, they're going to collect $4,000, $5,000 a month, and you're collecting $2,000 a month. And most likely they're having a better life than you do because they just paid that 8% payroll tax more. than you. And 8%, honestly, it is not a lot if you're bringing $400,000 or $500,000 gross revenue a year. So I try to show my clients a different way. Yes, nobody likes to pay taxes, obviously, but at the end of the day, it's the cost of doing business, right? So if you are really underpaying yourself, let's be honest, you're not underpaying yourself because you're distributing on the S Corp side, right? I will see that you wrote yourself a check for $5,000. Well, that $5,000 that you wrote to yourself is not tax deductible because you wrote it to yourself, right? But if you put that $5,000 on your salary, yes, there is $350 worth of payroll taxes. Time is 12. It's 3,600, I believe. Yes, right. But that's a 3,600 that you partially own. And when you're 62 or 65, your Social Security benefits is increased. On top of that, you already have a 401k plan. So by the time you're ready for retirement, guess what? You sold your Dell family home, hopefully for a big chunk of money. You're getting $3,000 to $5,000 from Social Security. You have your 401k plan. You can go anywhere in the world and collect their benefits. I have a client who is building a house in Peru. And I asked her, why Peru? She said her daughter went there for Peace Corps. And when the daughter came back from Peru, all she could talk about was Peru. So the mother decided to live in Peru, right? Why did she choose Peru? Well, one, the cost of living is very low. Labor is cheap. Land is cheap. And I didn't ask her what she's building, but just to think about it, maybe she's building a nice place close to the beach or somewhere in a valley where she's looking at nature, right? You can't do that here. So it's all about planning and strategy. What do you want to get out of life when it comes to your business? I already talked about this. A lot of things that I really see, I know I'm mixing strategy and compliance, is that some owners, they try to use the business as their personal bank account. That is not good. Just because you register as an LLC doesn't mean you're an LLC. If you're mingling both business and personal, you're LLC by paper, but you're not an LLC from compliance point of view. You are one accident away from being sued. And once you're sued, trust me, those lawyers who are representing the other party will look at every single thing. And the moment they find something that they can use against you, your LLC is out the window and they will come after you personally and you'll be liable for. So do the best you can not to co-mingle. If you are a single member LLC, S Corp, have a meeting with yourself. Meeting with your CPA is an annual meeting, November, right? Just keep records. You have a small book. Say today is September 27, right? Is it 27? I met with my CPA. We discussed this. This is considered an annual meeting. You probably meet with them more than one time, but just for records, right? If you asked, have you had an annual meeting? Yes, I did. I had an annual meeting with my lawyer. I had an annual meeting with my CPA, and we discussed these topics. You move on. They may ask you, what decisions did you make? Or these are the action things that we took. I increased my salary from $30,000 to $60,000 after reviewing my profit and loss. Okay, what is this? Is not moving. So this is just an example of someone who was an LLC single member that was not an S Corp. You see the difference of savings here. You can save $8,000 to $10,000 on self-employment taxes if you switch from a single member LLC to an S Corp. And what you can do is you can use that savings to pay the payroll taxes. Right? So it's just you moving money around. The goal is to pay Uncle Sam less legally. I keep saying legally, right? So also one of the things, the challenges that I see is that some business owners, they don't really have a legal team like a lawyer. They don't have a CPA. They don't have a good real estate agent. I tell all my clients, you're going to expand sooner or later, right? So at minimum, you need to have an attorney at minimum, because that's a liability. You invested so much in your business, you don't want it to lose it. I was telling someone yesterday, I think I'm a smart person, and I'm signing a new commercial lease. I reviewed the entire 60 pages. I read them. It took me 2 days. I highlighted, a few areas because I was trying to be cheap. I was trying to tell my attorney, focus here, focus there, areas that I wasn't focusing, right? Because I thought it can be better. I had a meeting with him, and he came back. He said, Abdul Ali, you're a CPA, right? Yes. And he said, did you know there's a class there that says the landlord can ask for your financial statements, and they can also ask your financial statements to be reviewed by another CPA to do an audit. Obviously, I can't audit myself. I say, wait. I already disclosed my financial statements to them. Why do they need it after I moved in? Well, 2 reasons. Maybe they want to see how much money I'm making so they can potentially increase the rent for the next renewal, right? So I say, take that out. That's not their business. Their business is to see that I'm healthy, that I can meet the monthly rent. Because that lease was written by the other attorney for the benefit of the landlord. So you should also have another team on your side. I always tell people, do not be cheap with your business, because if you are really cheap with your business, you're going to regret later down the line. When I say regret, meaning, you paid yourself $30,000, and 15 years later, people talk, right? Hey, how much are you getting Social Security? Oh, I'm getting 5,000. Especially my community, Somali community, Africa. We don't hide secrets. We share, right? And then you look at yourself like, oh my God, I wish I would have done that, right? Which means, too bad. You can't go back 30 years later. And the second thing is, you don't have to hire me as your CPA. Just find yourself a CPA. Seriously. Because people will come and say, my bookkeeper did this. Bookkeepers are great. There's nothing wrong with bookkeepers because they put your accounting together. But a bookkeeper is not going to discuss with you with a 401k plan. They're not going to discuss with you an accountable plan. They're not going to discuss with you, fringe benefits. Their goal is what came into my bank account, what left my bank account. A good bookkeeper might not even question the $5,000 you wrote yourself. They might not, because you're paying them $40 an hour. They have 100 like you. So why should they waste their time asking what that check is? Their goal is, let me put this profit and loss together and give it to so and so. You're not paying them to advise you. You're paying them just to do the books for you. There's nothing wrong with that. If your goal is just to do the bare minimum, then that's totally fine, right? But just keep in mind, you lost a lot of deductions that you could have got. You could have increased your $30,000 to $60,000. You could have increased your $4,000 salary to $5,200 because you decided to get the Audi for $1,200 a month, right? What are you doing? You're getting the Audi, the pleasure of the Audi. You're also increasing your points on your Social Security. So tax strategy is really, and tax planning is like an ocean. We can't cover it here. I just wanted to give you an idea of how to think about, going forward. You have 3 months from now, if you want to find ways to reduce your taxes legally, right? Invest in yourself. When I say yourself, I don't mean you individually. I mean in your business. You can also invest in yourself by increasing your salary, by giving yourself a 401k plan, by giving yourself an HSA plan. You can even do a 529 plan, right? One of the things I tell my clients is, they always say, Abdul Ali, you always like to raise the employees' earnings. And I say, well, if you don't increase your employees' earnings, then you're going to pay Uncle Sam. This is the reason you have high turnover. This is the reason, because we are paying employees very, very low wages. right? And we live in an expensive state and a city. So if you're making money, which I assume you are, there is nothing wrong with increasing $1 or $2 an hour for your employee. That goes a long way for that employee. If you can do better, even do better. Because the goal is, again, to reduce that $200,000 schedule K distribution to the bare minimum, right? I, 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 I can promise you, if you're paying somebody now minimum wage, and you go back after this session and you decide to increase their hourly rate, the possibility of them leaving you is pretty low because somebody else will use you. You invest in that person. You hire them for 6 months, 1 year. You train them. They got close to your clients, and all of a sudden somebody else came into the market. They looked at it. They're like, you know what? I'm just going to look for an experienced, caregiver, and I'm going to give them $2 an hour more. For me, one thing is I do is I help my AFX set up their own payroll. I don't do payroll for them. I have them do the payroll themselves. The reason for that is you will see the importance of payroll. Yesterday I have so many stories to share. Yesterday, one of my clients sold both her home and adult family home last year. And while they were waiting for the child, uh, one of the caregivers got injured at the job. And when the caregiver got injured at the job, thankfully, there was no L&I involved. But just imagine if L&I was involved. That transaction could have been jeopardized, right? So put employees on payroll. And I always tell my clients, I know that the business is a very challenging business. It's sometimes very hard to find, caregivers that have work permits. But at the end of the day, don't do someone a favor. Do yourself a favor by protecting yourself against all these potential liabilities. I tell them I'm not a lawyer, so I can't really give you a legal advice. I'm not an HR director or HR lawyer. I can't give you this. But what I can tell you is the severity of this happening. These are the potential pitfalls you can fall into. Just think this way. You're paying $3,000 for payroll taxes or L&I, and you try to save that, and something tragic happens to you. Well, trust me, it will cost you maybe $30,000 to $40,000 to defend yourself. So I'd rather pay the $3,000 throughout the year than face that headache. So I know I promised that my presentation was going to be only 11 slides. So how many minutes do we have? 11:40? 50 minutes? Oh my God. So I'm getting 15. Okay. Questions?
Thank you. Before you continue, I wanted to let you know that the auction is going to close at 1:30. So if you haven't put your name down on that auction right next door, you want to do that. But this is really good. Now, I just have a comment for you, and thank you for your presentation. I teach the adult family home administrator classes, so I get all sorts of questions. One of my students told me that they talked to a CPA and asked them, the CPA asked them, how much do you want a return? I say, if I were you at that point, I would have, how many people know you say Bolt from Jamaica? I would have put on his shoes and I would have ran, because it's not about how much you want back, but it's about how the taxes are done right. So I love that. Questions? Thank you for your presentation.
No problem.
Now, about the pass-through.
Yes.
Yes. So the only way to reduce is to look for avenues
Loopholes.
Loophole.
Yes.
Okay. Now, what are given as some of the loopholes? So, what others can we come up with apart from remodeling, furniture? What what else?
We talked about the benefits, the 401k.
Okay, the benefits.
Yes. The 529, thank you.
All the employees.
HSA, yes.
You have to include all the employees on the payroll.
Yeah, so there is a non-discriminatory policy on all plans that you try to give your employees, right? So even though you're an employee, you're still a shareholder, but the plan you provide cannot be discriminatory. So for example, you can't pay Abdulwali's tuition and deny Mohammed's tuition, right? So the plan has to be all equal. It's up to the employee to take advantage of it, right? So you can say, hey, if you're not a CNA or if you're not a nurse, I'm willing to provide these benefits to you. And you can attend Highland Community College, Good River Community College. You let the employee decide. In a way, if they don't take advantage of it, good for you because that's a less expenses you're paying, but also bad for you because now the Schedule K is a little bit more than we expected, right? So there are many avenues, and I tell my clients everybody's different and unique, right? When you're sitting with a CPA, we're constantly talking, right? And I tell my clients, please be the driver, and I want to be the one who listens. Then I can just say yes, no, maybe, maybe next year, maybe not now, right? Because when you ask me a question, I'm also asking myself a question. There is something else coming. So I,
So, for example, if you start a 401k program, can you stop it after a certain time? I think 1 year the past due is there, so you realize you lost two residents, you can't afford it.
yes, you can. Yes, you just have to contact the plan administrator and say, hey, there is no 401k coming. I don't know. There is a possibility that there could be a penalty that you have to pay. I have no idea. What I just do is when someone like you comes to me, I advise them. I send them to a financial planner, someone who helps them, and after that, it's done. All I see is the expense coming from the through the bank statement.
So are you saying, let's say, if you do the exemptions like a 529 or the HSA, if I do it for my son, I have to do it for like all my employees' children?
Well, so remember, your son is not an employee, right? So you're setting yourself a 529. Oh, the 529 plan, I see. So what you do is the 529 plan goes through your W-2 as a deduction. Yes,
So and also on the 401k, if you call to stop it,
yes.
you're stopping it including for yourself because you are unemployed, so you're stopping for all employees, that includes you. Like you can't do it for you and then not do it for the rest of them.
So this is like above my pay grade, right? But I'm just saying is that it's about the administrator that you're dealing with. So the financial advisor will actually advise you, and I think that's the reason. If you can just say, "Hey, I'm starting a 401k plan, but my business it's up and down, right? I can have 6 clients right now. Tomorrow I can go to 4 or 3, right? For obvious reasons. Maybe someone passes away, or maybe someone moved to a different city. Can I stop that?" And most likely they would say yes. However, you might have to pay certain fee to stop that. But you can also say, if I get potential clients, can I also restart?
So I have a question in regards to electing an LLC or a C corp into an S corp. Let's say, for example, you missed the 75-day window when you registered the company and decide to come back and to elect it to an S corp. Would you go back, let's say, for example, 2 years back and refile your taxes for that?
That's a great question. No, it's that current year. So you can only go, you can, so for example, you decided to do it this year, for example, right? And you're operating for 2, 3 years. This is what I do as a CPA. I'm sure other CPAs do it differently. We don't do the election right now. We do your taxes in March. And we manually file with the form electing and saying that we forgot, we were not, we were dumb. We don't say that, but there's a language we put into the form and say, I forgot to do an election. IRS, please grant me this election under Revenue Procedure X. We reference that. And 10 out of 10, they will accept that for that specific year. And then you get a letter there saying that you have been treated as an S Corp effective 1/1/2025. Question here.
So I have an escort,
Okay.
and I've always wanted to know clearly what is the difference between taking salary, taking distribution, taking or just leaving the money as a profit of the corporation. And so I wonder the difference between these two, and how do you make a decision of how much you pay under a salary and under a distribution under the net profit of the corporation?
Great question. No. You asked. This question always comes back. So there is no definition of what a reasonable compensation is. There's actually softwares out there that can determine what's reasonable compensation. I do it the old school way. I tell people, how much can you live off? The bare minimum. I mean, in King County, I think it's like $7,000 on average. That's the bare minimum to live in King County. So we say 7,000 times 12, that's $84,000. So at minimum, have $84,000 as your salary. That's what I say. The second question is, do not live all the, well, let me go back. You're not actually leaving the profit in the business. It has to be distributed. Whether you take it or not, IRS doesn't care. They're gonna tax you that. For example, if the profit was $100,000 after everything, except your, this is assuming you haven't paid yourself. Well, you will file your 1040. You will put $100,000 as Schedule K. You'll pay the taxes. I hope that you don't get audited, but if you get audited, the IRS will go back and they will say, Madam, you had an S Corp, you didn't pay yourself a salary, therefore you have to pay reasonable salary to yourself. Now the question comes, what is reasonable? It's up to the revenue agent who's auditing you, appeals, you and me or someone like me who's helping you. It was $100,000, maybe we can say 50-50 in this case. We can say, okay, IRS, we concede this case. We know that we didn't comply with the S Corp rule, which was to pay ourselves reasonable compensation. Therefore, you can go ahead and reclass $50,000 as salary and $50,000 as a distribution, and then you'll pay the payroll taxes plus the penalty and interest. You'll go back, you'll amend your 1040 from 100K to 50K and report the 50K as salary. So that is basically how it is. Honestly, I feel like I'm not answering your question, but you have to give yourself some type of a salary. Start somewhere, whatever it is, and go gradually.
So, assuming you already give yourself a reasonable salary, and there's still a chunk of money,
Yes,
how do you decide which of that goes as a distribution to you?
it's all
What would
distribution.
be the advantage of you doing a distribution to you, or just leaving it as a profit, net profit from the corporation, which you will also do that? So I don't understand.
Yeah, remember, you're an S Corp. You're not leaving anything there. I know mentally we're seeing a profit for the S Corp, but that money has to be moved to you. It has to go with you. It goes with your social security number, not with the EIN number.
But it's taxed differently
It's taxed differently under you,
under
the individual.
versus a payroll. So what would be the benefit versus
Well, there is no benefit. You don't want to take distribution. You want to reduce the distribution, right? One thing I actually forgot was taking loans against your business. I forgot to cover taking loans against your business. You can actually borrow against yourself, the business. But when I say borrowing, I just don't mean write yourself a check and write a loan on the memo. That's not what I'm talking about. What I'm talking about is talking to your lawyer, drafting a note, right, that says Abdul Ali Mohammed is borrowing $50,000 from Abdul Ali Mohammed CPA to be paid in 5 years at a monthly installment of $500 a month with an interest rate of one point whatever. You know what happens? You take the $100,000, it is not taxable to you, right? It's a loan, you're paying that back. But the key is you have to pay the escort back every month per the agreement of the terms. People will do that. They will go to the lawyer. They will get the agreement. They will take the 100K, and the best of us will probably make 2 payments and then forget about it. I tell folks, I hope you don't get audited, because that money, if you get audited, will be reclassified to distribution, right? I tell folks, the government they're out there. They're probably busy with others. It doesn't mean that they can get to you. I have a joke. I tell folks, imagine it's 11 p.m. at nighttime. Nobody's driving. You're in your neighborhood. It's a red light. I once cut it to the left because it was taking too long. But there's no cop there. Nobody's watching you. Why do you stop? 2 reasons. Well, maybe somebody else speeding this way, they can hurt you, right? Or there's a possibility there is a cop behind the bush that might capture you. So I tell folks, treat your tax return that way. Last but not least, whatever you put on your tax return, make sure it's defensible. When I say defensible, meaning that you can defend, even if you don't have a receipt. There is a rule called the Colon Rule, where tax courts have used that, where taxpayers have, they forgot their receipts, right, for something. And they actually appealed their case. They lost at the appeal. They went to tax court, and tax court actually sided with the taxpayer. Why? Because the expenses that was in question, whether small or big, was reasonable and ordinary. So imagine, for some reason, the IRS saying that you did not pay this much wages to your employees. Therefore, and for some reason, ADP went bankrupt and you can't get your reports online. Your house burned down, you can't get reports, but you provided those expenses there. It's all the necessary expenses.
Thank you so much for all that you have highlighted. All those ones you are talking is like you are completely directing them to me. I see so many mistakes in myself as I'm sitting here. So the next thing I'm gonna do is just follow you outside to fix my stuff. So yes, to be honest, I see so many mistakes in me. Because we get some sleep here, all we do is calculate payroll, my business residents. That's all we see. My bank is fine, I can do this. I'm seeing myself with so many mistakes. So thank you for highlighting that. So the question I have, on the LLC for 3 years, I don't have escrow. So am I a problem or am I the right place to go and escrow?
I think you are not in a problem. And by the way, you're doing excellent by actually admitting that you're not what you need to be. That's how you improve in life. So if you want to be an S corp, whoever is going to do your taxes next year, you tell them that I want to be an S corp. Whatever you need to do, you need to do it by March 15 next year. So a lot of people they're confused with the April 15 date. I think 7, 8 years ago is when they changed the dates. The S corps and the partnership was all due on April 15, along with the individual, and only the C corp was due on March 15. What they did is they flipped it around. They made the C corp due on April 15, and they made the S corp and the partnership due March 15. In my opinion, it's actually a brilliant idea because it's better to do your business first. Once you finalize that, then you can do your individual. So it worked out perfect. It was a headache the first couple of years, but it got better as we went.
My question is, some small business owners that they do some work for you for one-time repair or something like that, chunk of money, and they refuse to give you the EIN or they refuse to do the 1099. Just how you can file these expenses without the EIN or contract that they say.
Excellent question. I actually had a friend who was in the real estate business that was a flipper. And someone refused to give him the EIN number. But for some reason, he had the company name and an address and stuff. What we did was to protect him. We prepared a manual 1099, and we submitted to the IRS. That's all he had to do. You know what the IRS will do? They will match that name and address to the EIN number. All you have to do is just do your part and let it go. Yes, maybe a year later, you might get a compliance letter from the IRS saying that, hey, so-and-so, you provided the wrong EIN number. That's okay, don't panic. But if you read the paper further, it says no action required, but please check your records. Last but not least, stay away from folks who refuse to give you the tax ID number, in my opinion. The possibility of them not having insurance or being bonded is high. And guess what? If something happens, you're in the hook for that because you paid them cash, there's no agreement, you have nothing. And the funny thing is the difference hiring a contractor, reliable contractor, and a non-reliable one, maybe it's 10, 15, percent. I don't know. I don't do a lot of remodeling, so I can't tell you. But there's a reason why you have auto insurance, right? There's a reason why your coverage is a little bit higher than the average person because you have assets to protect. You have a home, right? You have multiple homes. You live in a great neighborhood. You have a good equity. You don't want those things just to go away, right? If you can just pay that little extra $5, that's fine. I have a question. How many of you have an umbrella insurance? Umbrella insurance. How many of you have an umbrella insurance? Yes. Wow, that is really low. By the time you live here today, I want you to call your insurance agent. I'm not an insurance agent. Ask them if you can get an umbrella insurance. I did not know that about umbrella insurance. I found out in 2016 when I bought my house. I just used to pay my full coverage insurance and be done with it. Well, guess what? My insurance agent, she's also my client. I do her taxes. I call her and I say, hey, I'm looking for property insurance, right? And she said, fantastic. She shopped for me. She found me, and she said, Abdul Ali, she said, now you're an asset owner. She said, you need an umbrella. I said, what is umbrella insurance? And she said, in the event that these ones don't cover this will kick in. And I said, how much do I need? This was back in 2016. And she said, you just need $1 million because you're already insured, right? My auto is insured. My property insurance is insured. Guess how much it cost me for the whole year? $360 for the whole year to have 1 million umbrella insurance. You know the joke she told me? She said, Abdul Ali, she said, imagine, she said, you were at Bellevue, dinner with your wife. And that's literally what she used again. She said, and you accidentally hit a Seahawks player's car who's driving very expensive car. She said, your current policy will not cover the value of their car because they had like $50,000, I think, that time. That car is a Lamborghini. It's $250,000. She said, they will go after your auto insurance, and after that, then your umbrella will kick in. I literally told her, please add to my premium. So if you don't have an umbrella insurance and you're a homeowner and you're AFH owner, I will highly encourage you to get one. Now, I'm not recommending it, I'm telling you to get one. Just for your own protection. Any other questions? Where?
Now a question here,
Oh.
and sorry for the lights we are watching.
No problem.
Sorry for the blackout.
Not a question was covered, but what are the rules on Medicaid? I guess you don't pay taxes, you have to Medicaid residents or other rules, you have to make sure private pay Medicaid.
So, Medicaid, as long as you live in the house, is tax exempt up to 5 clients. It is under the definition of foster care payments. So as long as you live in the house and there are 5 clients or under, is tax exempt. People ask me, what if I have a 6th person for Medicaid? Well, it's a little bit tricky. The reason I say that tricky is the IRS says 5, right? So 5 is tax exempt. So now we have 1 to deal with. Again, every CPA is different how they do this. The way I approach it is that one, we do an allocation. First, we report the entire income. We prepare it as if it's private to get the true net income you made. And then we go back and we allocate how much that should have been tax exempt and how much should not be tax exempt. And that's how I report. But I go further. I ask my clients sometimes, hey, this is actually a double-edged sword. Reason is, if you're potentially thinking about buying a home, that entire income is literally being written off, right? You're net to zero. So one, I tell them, please work with a mortgage broker who is familiar with your industry. Don't go to Bank of America or Chase because they won't understand. Because I seen clients that went there and I had to literally draft letters explaining, I have to send the IRS revenue procedure. They finally got their loan, but it gets tricky. On the other hand, if you don't live in the house and it's Medicaid, forget about the term Medicaid. It's all considered private. Yesterday, somebody asked me about, I think it was Providence Hospital. I think some of you get clients from Providence Hospital. I don't know what it's called. The question is that money coming from Providence, is that also tax exempt? Well, the answer is yes and no, and I'll tell you why. Providence is not a government institution. They're probably not for profit or profit, whatever they are. I don't know what they are. They're the ones who are paying you directly. But the money they're using to pay you is Medicaid money that they're getting from, right? Now the question is, how do you approach that when you're filing your taxes? It's up to you and your CPA. How should you approach that and how you should disclose that? I don't want to be on tape advising you on something different.
So is it up to 5?
Up to 5. The code is up to 5 as long as you live in the house. I was answering different questions than your question because I was anticipating those questions might follow that question.
No more questions?
So my CPA knows about the 5-person exempt rule. So he took way too many deductions this last year. And I only ended up with like $10,000 in
Profit.
from it yet.
Yes.
And so, I tried to get a mortgage loan, and he ended up finally, the banker was familiar with all this, and he'd already done a couple other loans for me, but this time, because my low income, he said, well, let's just do your next property as a rental. And I had to sign a statement saying I'm going to occupy the property, which worked out really good because I have to claim my adult family home anyway as my primary residence. And so I just moved a few things over there and don't really occupy the property I'm buying. Is that, how does that work? I mean, hey, if you took way too many deductions, can't you just tell your CPA, hey, don't take quite so many deductions and you want to get a loan?
Well, I'm not a mortgage officer, so I can't say, but I just tell people prepare your taxes the way that your business operated and deal with the rest. The reason for that is consistency matters, right? I'm not saying this happens, but it's impossible, in my opinion, to go from $200,000 to 1 million 1 year, unless you had like 4 properties that you bought and you fully occupied all of them. The reason I'm saying that is because we use metrics to measure you, right? So do the IRS, so do the loan officers. When you're getting a loan, they don't only look at this year, they look at last year and year before. Right? I think they request, 3 years or 2 years. So, and trust me, when your CPA sends that tax return, there's a work paper that's included there that shows the last 3 years. So if I am a smart loan officer and I want to make sure that this transaction doesn't fail, I'm going to look at the last 3 years. And if I just something funny, I'm going to question that. So I will encourage your CPA to really understand the adult family home site and see what expenses that can be claimed and that cannot be claimed. Can I ask a question if you don't mind? Are you filing as a Schedule C or S Corp? Yeah, but are you filing as a C Corp? I'm sorry, are you filing a 1040 with a Schedule C or you're filing 1120S?
1040 is Schedule C.
That's the challenge. Yes, that's the challenge. Talk to me after the class. We'll talk over there.
Question.
Question is, I'm contracted with police,
Pace, okay.
and I have big clients. So can I take advantage of the tax exemption from Bank of America with the contracted with police? I just need a clarification of that.
I will say the same answer, yes and no. It's up to you and your CPA how to disclose that on your tax return.
Back to the five clients. So even in the home when you have those five clients, according to what I understand, they're tax exempt. Now, if you get 6 clients, what is your opinion? Is that a blessing or what kind of is that going to be to you? Is that an asset or a liability? I mean, basically, what is what I'm asking. Or is that going to lead you down tax problems?
No,
The 6 clients.
it's not going to lead you to a tax problems. The sixth client, whether it's Medicaid or private, the income is private. That money is not tax exempt. When I'm doing taxes for someone like you, I approach it from, is there a way that, because you know when the sixth person came, right? You know, you already have fifth. Is there a way you can keep track of the specific expenses that went to that individual? Most likely, no. You will not be able to. How can you know the food you bought for that person? How can you know the utility costs that I want this person? You don't specifically know that. That's why I say I use allocation method to determine what to deduct as expenses and what to report as revenue. The other CPA can just say, okay, you know what, it's 10%, blah, blah, blah. I will just deduct 10%. That is also, in my opinion, okay. Is it fine? No. What I do is, once I do that, I write a disclosure statement for the IRS. Why we taking this position of doing? The reason for that is, in the event that you are challenged by the IRS, we've already disclosed our position. And that position most likely is a position that you will win. It's just, it's 2-page disclosure explaining why we went this route, and we determined that this is how it's the best way of preparing taxes. I probably didn't answer your question, but that's the answer I'm going to give you.
No more questions?
So my question is, so I have multiple homes. I have 6 and I've been in business for 30 years.
Okay?
So I have a lot of birthday and I have a lot of private. So if tomorrow I visit 5 people exempt and they know the license is for 6, so why? What is the reason for removing this one? And secondly, then my husband is exempt 5 from one house and I exempt 5 from another one.
That's an excellent question. You know, when you're doing this for the last 7 years AFH, you see everything. I actually have so I will answer your question. The first one I will answer, which was why 5, not 6, right? Okay, this is my opinion. So please don't take it to heart. This is my opinion, okay? This exemption was not made for the adult family home industry. That's my opinion. How did I reach this? By reading the IRS code. This exemption was specifically made for the foster care payments. A mom and a dad or a person who is taking in under 18 or disabled people, that's helping alleviate the pressure that's on the state into their house. That is what the code was made for. The code hasn't improved since 1986 by the IRS. So I tell my clients, you find a loophole, write as long as you can. Be glad it is 5, it is not 1, right? And you can pay the 1 extra. That's my opinion. I'm sure a different CPA might have a different opinion, but that's my opinion. You're number 2. By the way, I'll give you advice, which is you might need to start thinking about being a C Corp if you have 6 homes, because it might be more favorable to you when it comes to tax savings, because you just pay a flat 21%. But that's another day to discuss, not here. Your second question, which is, can my husband be exempt? I actually have a husband and wife as my clients, but they're doing it the smart way. You know how they're doing it? They're an LLC, but they chose not to do an S Corp. So we filed 3 Schedule Cs. They have 3 homes. They have 3 homes. And each one of them lives in one home. There is only one home that is private. So when I'm filing their taxes, I file 3 Schedule Cs, right? One for the husband, one for the wife, and one for private. Even the third one is Medicaid. But that one is 100% taxable, and they know that. For them, is they realize it's better this way for them to do, because the first 2 Schedule C are very easy. In, out. Revenue in, revenue out, because they live there, right? The third one is straightforward, right? Total gross revenue minus all the necessary expenses. So what I'm trying to say is, yes, you can, but if you already have 6 adult family homes and you're running this business for a long time, you're a sophisticated lady, so I'm assuming you're an S Corp or a C Corp.
Thank you so much for what your presentation does with. You mentioned something about the providence payments, which directly
Yes.
payable through for MCOs.
Yes.
Now, it started last year, I think. So most of the income that we're receiving for MCO
Yes.
is being received this year. And you didn't tell us exactly what we're gonna do when we come to tax returns for this particular income when it comes to next year now. What do we do when we come to you and we have a chunk of most of the income will be from MCO?
Yes.
And it's from the five clients.
This question is kept coming back, and I'm gonna see if I can answer differently. Okay. So remember, we're following a set of rules set by the government and the IRS. We cannot change that. We have to follow it. I tell folks sometimes some laws are not just. We just have to embrace it and move forward with it. Okay, for those of you who have clients from the state, at the end of the year, regardless of if you are an Inc. or an LLC or a sole, you get a 1099, correct? Non-employee compensation. You get that with the total amount. For those of you who have contract with Providence, if you are a corporation or an S corp, most likely you don't get that 1099, correct? You get a statement that just shows how much money that Providence paid you. They're not giving you 1099 because typically corporations don't get 1099, typically, but some do. To go back to your question, that income, it's gray, not black and white. It's gray. And the reason I'm saying it's gray is the source of the color of money have changed when it went from healthcare authority to Providence to you, right? The state is paying Providence. So Providence will not take an exemption anyway because the client doesn't live with them. But Providence turns around and pays you the money. Whatever they keep, I don't know how much they keep, admin fee, whatever it is. But you are not contracted with the state. You are not getting Medicare money. You're getting private pay money from Providence. Now the question is, how do I treat that money? Do I report it as private pay, if it's private pay, or do I report it as Medicare pay because I know I have to file, I have to report from the client that they're being covered by PACE, is it PACE? That is being paid by Medicare. So it's up to you and your tax preparer and your CPA to take a position.
As we get to the 10 minutes too, I'll give you the last question.
Thank you. I just have a comment on the lady earlier asked about retirement plans.
Yes.
So 401ks can be expensive with a third-party administrator, so you ask if you want to set it up and then maybe stop it. If you stop it, you have to wait a year to agree to do it again. That can be an expensive process, but you don't have to fund it. So you can put up to $23,000 for yourself if you're over 15 to 31,000.
Yes.
But you don't have to put anything in unless there's a safe harbor for your employees. You have to match their 3% of the credit. So just want to give clarification. You don't want to do a 401k thinking you want to stop it. There's so many other cool. So I'm an investment advisor. My
Thank you. See, that's the guy you want to talk to. I have a client. She puts in only $150 a month for that plan just to fund it and just because of the she doesn't want to disconnect. So for those of you, you can always increase, right? You can always increase the distribution. So if you think about 401k plan, please, that's why I send people to someone like him because they know more than I do. I'm here to help you with the deduction side, right? If you do this, it's tax deductible. It reduces your tax liability. But the benefits and the rules and regulations, it's a different plan. It's a different law. One thing I forgot to mention was that a lot of you are not C Corps, which is totally fine. Sometimes there is nothing wrong with being a C Corp. The reason I say that is because it's a flat tax of 21%. For those of you, I tell folks, once you reach 3 adult family homes, that is an area you should think about switching to a C Corp because you rather pay the 21% flat rate tax. Because if you're doing an S Corp, all three of them, and you have 150K here, distribution, 150K here, 150K here, you're already at $450,000 just distribution alone, right? And by the time you come to your 1040, you're going to be paying 30 plus rate tax. So you rather do the 21% flat, but there's a catch to that. If you decide to take that money out someday, it'll be a dividends, it'll be a double taxation. That's maybe next year we'll discuss that.
So remember, when you have different LLC, if you choose to have 3 different LLCs, remember with your application process with DSHS, each one has to have a unique entity representative.
And it's also good for your liability protection. In case one house falls, other two will not fall. So try to separate them. You have a question? There's a question here.
I had a quick question. I wanted to find out. I recently was interviewing a caregiver, and she had an ITIN.
She had a what?
ITIN.
Okay.
You,
Don't hire her.
I did so that you know, but I was like, what is that? I mean, how does that work? What's that?
She will cover.
That's a contractor. Anyone, employees are defined by the IRS.
Yes.
So within the adult family home, we are required to do an orientation for our caregivers. Anyone that is showing how to do a job or what their tasks are and how to do it, they fall under an employee and they cannot be a contractor. A contractor would be more like I contract with a roofer.
Yes.
When I give that job to somebody coming to work on my roof, I don't get on my ladder to tell them how to get the job done, or an electrician. And their income comes from several businesses. So
Yes,
you
yes.
have to be very careful. Am I right?
Absolutely. And as a CPA, I want to be honest here. I don't do payroll directly. I encourage my providers to run their own payroll. My business card has a payroll, but I focus on payroll compliance, meaning if the IRS or the LNI or ESD sends you a letter, I try to help you with that. The reason for that is because the IRS is very strict on who's an employee and who is not an employee because their goal is to collect payroll taxes, and you're not remitting that when you treat somebody 1099 as well. And also keep in mind, I don't want to scare you, but you're one fall away. You're one fall away from that caregiver becoming an employee that you'll be responsible for later, both penalty on the LNI side and maybe the IRS. We have 5 minutes left, so
Thank you.
thank you.
Thank you for that wonderful
Okay.
presentation.
I just wanted to capture this.